First, I would like to ask for the stage also with me, the other panelists. We start with the alphabetical order. Markus, oh there, from Austria, and having several deals going on from Bazaar. Marko Luoma, my trusted investment banker from Finland. And Rob Patterson, everybody knows Rob. He's dealing and wheeling with different kind of deals with Rush Media at the moment. Tim, CEO of Maskus, but has also sort of dark background in dealing and wheeling with different kind of big companies and private equity firms and so on. And what I'm doing here, okay, I'm the board member, but I also have a sort of a dark history being I started my career as an M&A and tax lawyer. So I'm done with making the documents. I'm now in the negotiation part and having a lot of M&A, do with a lot of M&A in Sanoma at the moment. Not only divestments, also acquisitions. We have compiled a small presentation for you in order to warm you up a little bit and explain what's the situation in the classified market is at the moment. Some of you, there are very experienced people here in this room that are all the time following these events and doing even deals, but then there are also people that are not that familiar with what is happening with the big companies. So we start with Axel Springer. Axel Springer and its biggest classified part, Stepstone, has been very aggressively expanding in recruitment boards. 3 recent acquisitions, Sound Group, Your Career Group, JobSite, and the only one that we found out the price was the latest acquisition, which was like last week or week ago, so 110 million euros in the UK market. What is big thing here is that there is a rumor on the market that they will do an IPO for the classified company in order to get more money for the further acquisitions, and the rumor is on the market that the valuation of that new, if it's IPO'd, the value would be 3 billion euros, which is a reasonable amount of money. eBay. This is from Wikipedia. eBay was very active in classified acquisitions like 10 years ago, has been a little bit more quiet now, and we're discussing with Tim that they have been acquiring, but they don't want to publish anymore. So last summer, for example, they bought the biggest general classified website, Vedehanden, in Belgium. But it's not on the list, but they are still active, and but you cannot read them from public sources, perhaps from the annual report then only. Schibsted has been continuing their acquisitions. You know they have 2 ways of expanding. The one is the Blocket clone launch, greenfield operations, and the second one is then that they acquire smaller sites. Recent acquisitions, Hungary, Express.hu, Auto, and then they finalized the deal with Milanuncios in Spain, valued 550 million euros, but that was based on an earlier deal with Trader Western Europe since 2006 when they ended the Spanish market. They also made a big joint venture between Telenor, the Norwegian telecom company, and Singapore Holdings, and established S&T classified in Southeastern Asia and then in Brazil and rest of South America. So they are a little bit also sharing the risk with other big operators. They also made recently a divestment. They divested their Baltics operations to East Media. And then Kinnevik, a little bit less known company. This is a holding company partly. So everybody knows the deal with Avito last year. That was one of the biggest deals for a while. In Russia, they combined their forces with Naspers, but they also have done a lot of deals in Southeast Asia. An example, Quicker in India, the leading horizontal classified portal, 30 million unique visitors, 100 million visits in a month, growing very rapidly. And then there are also other companies, SaltSide, Vimdu. They have also Foodpanda, which is a food comparison, and online grocery store, PricePanda. But they are really putting a lot of effort in this and also in e-commerce in general. So don't forget this name. They will be appearing as a buyer in some of the markets for sure. I already touched upon this Avito deal last year, 570 million deal, and So consolidation on the Russian market, and now Avito is the third biggest. They claim to be the third biggest classified site in the world after Craigslist and China's 58com, which is, I think, an achievement. And here you see the recent numbers of Avito, 73 million of sales and EBITDA around 21 million last year. And so Kinnevik is owner of this, and then Naspers. That was step one. And then step two was that they announced like last week that they are establishing Naspers and then Avito, a real estate portal in Russia. So they are continuing the consolidation on the Russian market, Naspers and Avito. Then, unluckily, Jack was not able to join us. He would have been able to tell more about the US market. There are two big deals, or one deal recently done with Classified Ventures, a company owned by big newspaper companies. For example, Gannett is an owner. So they have recently divested apartments.com, which is a online apartment rental website, with almost $600 million US dollars. And I think here what is interesting, what we will talk about in the panel, that who is the buyer? The buyer is not an online classified company, it's not one of the big ones, it's a commercial real estate research firm. So a data-intensive company is the buyer here. Now for sale is the cars.com, and the price tag, according to public sources, around $3 billion US dollars. And the buyer can be one of the Classified Ventures companies, but it can also be an outsider. And one example from the UK, and Rob perhaps can tell more about this, and Pre-Loved, the second biggest classified website, was recently sold to an online retailer, Hood Group. I don't know this company, but they have a lot of operations in e-commerce in the UK at least. So they say that they would like to combine classifieds and e-retailing and use the huge visitor volumes that like Pre-Loved has, so for their own purposes. And it was sold for £8 million. So that was number two. One of the topics that we have here is that whether the market position, how much the market position, number one, affects the price, how much discount is, how much premium is paid for the number one, how much discount is then taken away from the number two on the market. And here I have the questions, because the purpose of this panel is not that we talk here to each other, but the thing is that you would learn something, that you would earn your air ticket back. So our goal is that you would earn your air ticket back, the fair airfare. So these are the questions we are going through a little bit. Ask more, because there are very experienced people here. Joseph, for example, hit in if we are not precise enough, if we are not adding value to you, so hit in. There are also some other people that I know that have a lot of opinions and experience in this. So these are not in this order, but these are the topics. If you find that there is something that we don't touch upon, please ask. So let's go, guys. In order to warm up a little bit this panel, so is this now hot topic? Is it hot to be on classified business? Is it hot? Is the top of the hype curve now the acquisitions that are going, because there are several acquisitions, there are a lot of targets for sale. It is the top of the hype curve, or is it only we have seen the beginning, or is it now that if you have not sold your company now, it's too late because the prices are going down? What is the opinion? Short opinions.
I can talk about, but in one case for me it's very hot because today is the last day of a binding offer. I try to buy a market leader, so that's why I'm involved in this topic. I think it's still hot. It's not too late. There's happening that much, so.
Not too late, not too early.
Not
the one that like now everybody's paying too high prices and after a month everything is collapsing.
No longer. Okay. I don't think.
Okay, Marco?
Not too high.
Yeah, I agree. So if we think, is it like too hyped, I think it's more like long hot summer that, yes, the valuations are high, but the business is good as well. It's growing business also in mature markets. So I think it will continue like this.
I think it's just the beginning, actually. I think there's going to be a lot more consolidation, and then people are going to start looking further down into niche classified sites as well. So it's really early days.
Tim?
I think it's quite hot right now because you are showing 4 companies right here and they are buying. They want to be the number 1 in every country, and they know that if you're the number 1 today with Blocket in Sweden, you're untouchable. So right now they are shaking the cards. So this is where you get the highest valuations, in my view.
Okay, now we go to the question about like, why are the classified website owners selling now? Or is it so that now it's the price, the time and place to sell to the big guys, and otherwise they destroy you?
I think so, because nobody is selling. They're selling because they're being asked by these huge companies, and they come in with huge valuations. If you see what Axel Springer is paying, it's a temptation that it's very hard to resist. So I think right now in every country they will try to buy the number 1 or be the number 1 by just investing blindly, marketing money. And then maybe there will be a second phase where some of these companies will divide the pie, and then we will get a second phase. That's my view.
Any other differing opinions here?
I agree with Tim. I think it's big companies making offers that people can't refuse, or the alternative is they're going to destroy you in that market by outspending you. So it's a pretty compelling reason to sell.
So yeah, they are forcing you out from the market. Is that your opinion?
I think it of course depends on what's your ownership base. So I think it's very natural if there are private individuals or investment funds, private equity funds owning these assets, they are kind of natural sellers. But it's much tougher decision for conglomerate media companies or locally or regionally very strong media companies to let go of these assets.
Yeah.
So some of these big deals are deals where kind of the incumbents are selling, but I would say more in the market that every media company wants to hold on to their classifieds. So the deals are more on those companies where the ownership base is a bit different.
I think it's clear that the private equity guys are now checking that it might be a good time to sell now, but there are also sellers. There is, for example, digital media companies who sold the job site now to Stepstone.
That's true.
It's publisher of the Daily Mail and several other titles. It has huge asset base in online websites in UK. Why they are selling? Is that market so heated, or is it like only one market, UK market, or?
I think for them it's just a matter of focus. So it was not core to what they're doing anymore.
Yeah.
So they didn't see the value in, and somebody made an offer as well.
So what was the reason behind the pre-loved sale?
The pre-love sale, this is a very different type of ownership situation. So it was one guy who'd started it in 1999, and he'd been approached a couple of times before, and he just felt now was the right time to sell. It was a lifestyle choice. So I think very often for that founder type thing, it can be that he wasn't under any particular pressure to sell. He wanted to sell to change his life.
Yeah.
And clearly he did by getting £8 million.
Yeah, on the other hand, £8 million is not a lot if you look at the valuation for number 1. So that's also another aspect, that the big guys are buying the number 1, but by paying a top price for number 1, number 2 is actually reduced in value, because now it's going to be so hard to beat them.
Is it reduced in value?
Well, I think so, if you look at this valuation for the number 2 website.
He actually had an offer for over 17 million for the site, but it was the terms of the offer. So that was from a private equity fund, and there were some performance issues, performance triggers for that value. So it's still not close to what he would have got if he was the number 1, but it was more substantial than the 8 million that's showing.
Yeah. Any questions as regards the owner side? Because there are a lot of owners here, classified website owners. There are the CEOs and owners here.
I just have a question on the last topic there, on the multiples of the EBITDA. I get the sort of valuation difference between being number 1 and number 2, but the disparity is just enormous. I mean, the pre-loved is at 4.5 times.
That's
EBITDA.
right.
The number 1s are being sold at 25, 26 times. Maybe even some of them went for 30 times EBITDA. would love, I can understand it being twice or 3 times the multiple, but it's actually 6 or 7 times. It's extraordinary.
The biggest reason, in my view, is that if you look at the Netherlands, for example, the #1 website is so big, they can charge 5 or 10 or 20 euros to place a car ad to a private individual. The #2, I think Marktplaats is doing now a revenue of maybe 130, 140 million euros. The #2 website is owned by the biggest daily. They have a revenue of maybe 2 million euros. They are, at the moment they start charging money to place ads there, the content will be gone. They tried it and they had to come back on it. So that's why the consumers are willing to pay and they're not going to 3, 4, 5 portals. And that's why there's such a huge difference in my view.
Aren't you afraid that one of the we go to the multiples still, like this is an interesting discussion, and I hope that we would come out with the list of things that when you look at the multiples, or what would you like to, what you have to do, and what is the discount factor for the multiples? What do you think? What is the threat if you have a market leader? And what is the threat of these freemium players that are coming to the market? Because that's, for example, Schibsted's strategy entering into market. You have a nice market player in a country, charging nice sums and being the lazy dominant player, and then Schibsted enters in the market with the freemium model or free model. So are those really so untouchables, those guys? What happened in Norway now? Finno, which is Schibsted really like flagship product in Norway, they had to transform the general classifieds into free. So they, in their report, say that they are losing 4 million, almost 5 million euros in revenues, and that almost goes to the EBIT because it's very, very, very like profitable. But they even have to sort of compete against the free model. So what do you think? Are they really so? Is it fair to pay that kind of premium if there is the free models always available?
You want me to answer it?
Yeah, we start from here.
You go first.
You started it.
Yeah. No, I think, yes, they're buying the #1s. And in some markets, when they're too late, then they can go for this costly, I mean, in Brazil right now, they're fighting to get the #1 position. So both companies are spending millions in marketing money every month. It doesn't make sense. So they will try it for some time and then probably one will give up, or they will each have a part of the pie. And another strategy could be to launch in a country where you don't have any position to see if you can make it. But if in Finland, I don't think there's a big horizontal established. There's verticals, but there's not a really big horizontal. So maybe that's the opportunity they see in your market here. But I have not seen many cases where you have an established player, like Blocket, for example, in Sweden, and then somebody else trying to get in. At least not to my knowledge.
I don't think they're untouchable, and I think the Milanuncius is the best example of that.
Mm-hmm.
So Schibsted had the #1 position, over monetized, and allowed Milanuncius with a pure freemium model to come in and essentially destroy that business. And that was 2005, I think they started. Yeah. So it's not that long ago. Is that possible in the other markets? Maybe.
Could it be that with the emergence now of mobile as a new channel, they're positioning themselves early to get a foothold in that market when mobile becomes far more
when mobile becomes far more entrenched for a user? Do you think that could have anything to do with it?
Rob, do you start?
I'm not sure I understood the question.
Okay, all right.
No, but I think, so you're saying, are they buying now ahead of
the
mobile?
Boom, yeah. Because mobile and web are very different in a user's behavior.
They may be thinking like that. I'm not sure. I think that one of the best opportunities to disrupt some of these market leaders is through mobile.
Yeah.
And you're seeing that to some extent in Germany with Spock, and I'm sure that that will happen elsewhere. So they could be doing that, Felix. Yeah.
I would even say that the mobile products of the incumbents are not very good. The big ones, it's not very good. The small ones at the moment coming to the market, like with the private equity money, they have better mobile products, but their business model is not necessarily there. So that's the challenge with Spock, for example. What's the business model at the end of the day? Because even if you're in mobile, you have to have a business model. So, because they make a lot of money, ships that makes a lot of money, Kinnevik makes a lot of money also with display advertising. And display is not that, but you cannot monetize it in as efficient way in mobile as you can in desktop. Leads are then more easily done in mobile and can be more valuable, but that's sort of like, then you have to be very efficient in targeting.
Spock's business model was quite simple. It was come to ICMA, run a workshop with the head of Shipstead attending, and then sell your business to him.
Yeah, but that seems to be like the business model of several new sort of companies.
Where is he? Is he here?
Not in the previous one. So one of the things is that these new companies that are coming to the market, they don't call themselves classifieds, they call themselves marketplaces. But there are a lot of those kind of companies at the sale, at least in Denmark. I have received several offers from there. But going back to the owner, we come to the multiple still, but I think we have to warm these people up here that they say something that they regret afterwards. And warming up them a little bit like, who are the buyers except like these big ones? Exclude them, because I think one of the interesting, I mentioned two interesting buyers there, with the apartments.com, online research company, online real estate research company, and then a Hood Group, so a retailer. What do you see the consolidation there? Any?
No, well, we're a buyer as well, or a potential buyer. No, I think it just shows how attractive those businesses are. So I'm sure the Hut Group have bought it for all the activity that's going on that site and the opportunity to turn that into sales on their other platforms. And I'm sure the real estate purchase is something similar to that. Apartments.com is like that as well.
Yeah.
So finally, people are realizing the value in those classified marketplaces.
Yeah. Marco, how about like if the prices are now too high, or going too high, so how the private equity companies are, how do they see this? Because it should be cash in, cash out, and cash more than what they have paid. So
yeah, of course they don't see it's overpriced if they are buying. That's pretty clear. But I think if they are looking at, for example, the very big deal in US, I think they see that as rather mature market, but so very large market, already making good cash flow market, but then as general growth market, but not like a huge growth market, but kind of as a pretty solid business that would make private equity funds interested in. Then of course VC funds are interested in more startup type of companies and new revenue models, but I don't think they put up $3 billion and then start to invent new business models. So they try to develop the current model further.
But if we think about now that there is a threat of listing fees gradually fading away and more like performance-based business models coming in, and then we have investors that are not industrial investors there, so that there is a pivot or business model change in the future coming like within 5 years, in some markets earlier, in some markets later. So then the right buyers should be like one of those big ones, or then consolidation, or Tim, what do you think?
Well, I think it's a threat because, at least when I look at the marketplace I've been working for, if you're able to get a subscription model going, you will have recurring revenue, and that's what especially private equity firms really value very highly, and that makes it possible to pay these huge valuations. So the moment those subscriptions are off the table, and it's now depending more on response and your position in Google it becomes more of a risk, and then I think it will hurt the valuations. So I think if we all agree that we're not going to go down that path and just keep on selling subscriptions, I think it's best for everybody.
Yeah.
But of course, I mean, as wise as they are, private equity is not always right. So if you think of similar type of things, so I mean, 7 years ago, very many large funds were paying double-digit EBITDA multiples for directories business, which was something that, you know, everybody could see that this is going to die. But still they
paid.
Still they paid, and they paid billions for those, and those all ended up in
trouble.
Yeah, and that was subscription-based business model at the end of the day. Okay, some variations there, but it was a subscription-based.
Yeah.
And so the print directory model, business model, was transferred to the online, but that didn't live. So now the question is whether this classified print business model will carry us forward. And we get the subscriptions paid by the
I'm not sure it's a good idea to build your business around a business model just so that you can sell at a high value, because that's flavor of the month now. It's better to build a business model that your customers like.
Appreciate.
But yesterday there was a slide about valuations which was actually not connected to the business model at all. It was more about the brand strength. So the valuations, there was a correlation between the valuation and direct traffic. So I think that's what's being paid. So that was definitely the case with Indeed, I think.
No.
So if we would now put up a list, like what would be the reasons why somebody would pay a premium for your classified asset, so please name a couple of things and we make a list of that. These are the ones that you think that you would pay premium, or at least that you know that is paid premium for. So what is that? Number one, market position. What else? Premium is paid for.
Synergies is obvious, of course, for media buyers. If you have many products, many categories in the same market, you get sales synergies, you get cost synergies.
But synergies are usually overestimated, and they shouldn't ever be built in the price. That's sort of like that I'm told always, that don't come up with your synergies and say that you should pay for synergies, because the realization is usually very very little and comes halfway only. Something else.
But you can look at it in many ways, but just also the operational, the amount of traffic you get, how much
traffic
you can boost your
other
businesses with this. So I think those are good reasons to pay, you say, premium if you compare to multiples. So you get clearly other things than just the EBITDA of the company.
Markus, what are the factors that you would do? Name me 3 factors that you would think that are worth premium. Or 4 or 5. I write them down.
First, connected to the market position, marketing spending, of course. We know marketing position is easy to buy. At least we don't want to spend the same amount each year. Then organization is important, at least for us.
So the team, what you are buying?
The team, yeah. If the owner will stay in, or how it's built, like this. Of course, the development of there's one and more product is really profitable. Yeah.
Rob?
The market position, brand strength, and if it's not a horizontal, or even maybe if it is a horizontal, is the market economics. So the population size, how much opportunity there is, maybe how many dealers there are in that particular market, or whatever it is. That would be the factors.
Yeah, maybe to see what the upsides are in price increases.
So the quick and dirty.
I remember, somebody buying classified papers. The only thing he did was double the price, and he would not lose any circulation revenue at all. This is a long time ago. But this is an old trick. And you can still do the same trick with classifieds, because I feel I've seen horizontals raise prices, everybody complaining, but accepting it.
Yeah.
And that's also an upside I think you can look for.
How much you would, I'm going to ask this from Margo also, but how much premium you would pay for that? We talk about brand. The brand means also that you get organic, direct traffic. So if you are totally Google dependent, that's part of the same as the marketing also. If you have to all the time market but what's the value of the brand in top of mind? Net Promoter Score, organic traffic.
I think it's huge. The value, if you've built a lot of the classified sites that we look at are very functional and almost entirely dependent on Google for their traffic, and that isn't necessarily sustainable.
Yeah.
Whereas if you've built a real brand so it lives beyond Google search traffic, then that has huge value, I think.
Yeah. Marko, a professional.
No, I mean, I think just without any context numbers to put, so I think that's the best answer Rob gave, that
Yeah.
it's a very good reason for premium, but of course it depends on the market, depends on how much there are opportunities.
Now the question is, what kind of EBITDA level you would require from the market leader? So if we say that, okay, there's a market leader on the table, what would be of course, depends on the market size and the vertical, and whether it's recruitment, or what's the EBITDA level it should be, percentage? 20, 30, 40, 60, 50? Anything goes.
It's kind of the better the lower, because then there's potential, maybe better potential for you to raise prices.
Yeah.
Yeah, I think when you look at some EBITDA figures, you get the feeling that they're not sustainable.
Yeah.
So when they're 70, 80, then maybe you think that that's not going to last. There's something wrong with the dynamic there.
Yeah. And Schibsted has, the first slide I very quickly went through, so Schibsted has a way of explaining the strength or the market position importance, that they say that if your website is 3 to 5 times bigger than the number 2 in page views, so your EBITDA margins would be 60 to 80%. And then if it's like 1 times bigger, then it's like much less. So do you believe that there is this kind of clear, like
I think so.
rule or?
No, I think so,
trend?
because this is exactly my story. The winner takes all. So if you are 4 times, 5 times bigger, you don't need to spend any more money on marketing. Everybody's coming to you, direct traffic.
Yeah.
And of course, there can always be some smart entrepreneur coming in with a freemium model. But in the end, that's why those are much more profitable than if you have to spend something on it.
Yeah.
Because that's the difference in my view.
Any questions from here, like as regards the premium? Why to pay premium? Or what is the discount factors? What would be the discount factors? Is number 2 or a discount factor big, or number 3, number 4?
Well, it depends a little bit on the business, because we're talking now only about horizontals.
Yeah.
But if you look at my business, for example, marketplace for selling machinery, business to business, we see there that it's not the case at all that the winner takes all, because
you are number 2.
well, we
Oh, sorry.
no,
Almost number 1.
There's one number 1 in agriculture. He's sitting in the back, and we are the number 1 in construction. So it's different segments. So we're everybody's number 1. But it's not that important to be number 1, because we see the business-to-business advertisers. They will be on 2 or 3 car portals.
Yeah.
They will be on 2 or 3 machinery websites, because they have a more opportunistic approach when they advertise. They see it as marketing. While a consumer, when he needs to sell 1 car, he's first going to try it with website number 1, and then if it doesn't work, he might go to number 2.
Yeah.
So they are much more selecting one player. So that's a big difference. And that's also why in my type of marketplaces, these valuations don't differ so much.
So in B2B, it's safe to be number 2 or number 3 and still get a good valuation. And then is this the conclusion? And C2C is much more difficult. Like if you don't number 1.
Well,
It depends how much
depends.
difference there is. I mean,
Yeah.
it's definitely a huge discount factor if you're not number 1.
Yeah.
And also it depends on the development. So I prefer to buy a number 2 who raised from number 10. It's sometimes better than the number 1
the
who
growth,
is
just a
the
good
growth is very
going
important
down.
as well.
Yeah. Hey, any questions? Marta?
I imagine you have considerations for companies that still have a
Anybody who would like to answer?
It depends who is the buyer, but if you look at these 4 big guys that were just on the screen, I don't think they bought any print anywhere on these deals.
Yeah, not necessarily.
So those guys are only looking at the online winners, and that's most cases no print attached. But I think that there's nothing, it's outside the discussion because there's many more people in the world interested than just these big 4s. And I think from a valuation point of view, as long as you can completely separate the two and make very clear that this is the online component and this print is still supportive, I think it shouldn't hurt your valuation. I had a paper myself. We went from 100,000 copies a week in 1998 to 2,700 copies a week in 2007. So then we stopped it. And the only thing you could argue is that many people always tell me we're still making money with the print. Might be true, but you're spending a lot of energy and you're putting a lot of good guys to do that, to keep it alive as long as possible, and that could maybe set you back on your online part. But I'm not the best print lover to ask, so.
I don't think it's...
Rob is also a print lover, or used to be a print lover.
Yeah, he left.
I never loved print, so I used to deal with print. I did love print when there was only print.
It also depends on the company who's buying. That's why I think how to sell, it's important that you have a partner who's helping you out, because I just can talk about our company. I bought in Austria 2 years ago a print because it made sense. Our company bought in New Zealand Trader, mostly print, and now we develop online. So it's also still companies who are buying successful.
What was the paper that you bought?
Auto Trader in New Zealand.
So Rus Media would buy something with print, but its preference would be not to have print, but that's because we understand print. So, and I think you're not going to attract some buyers if you have that print element. It's clear.
And for example, in India still there is very big and in the US of course, in India is a big classified papers, and even in a lot of classifieds in newspapers still. So there are, I think, the different kind of cycles there. Anything else you would like to ask about the premium thing or discount factors? There is Thomas.
Yeah, I have a quick question. As for internationalization, actually none of you have mentioned that as a premium factor being present in many countries. Is it a factor or is it just close to my heart and that I'm asking?
For us, it's absolutely true. We as a marketplace, why are we not being swallowed by these horizontals? That's because the Dutch advertiser is not only interested in selling this machine to another Dutch guy, because that he can also do with the horizontal. No, he wants to sell it in Romania or in Poland or in Russia. And that's why, where we have 40 languages, we're really able to differentiate ourselves from the horizontal. So it's absolutely true. It's our strongest point.
So B2B vertical niche and having international potential so that your customers are international at the end of the day.
Yes, and then you have a proposition where you can be a good alternative.
Yeah.
But you also have to be realistic. In my case, often comes a company showing my business is working in this country, I need your marketing money, then I'll be successful all over the world. Give me 100 times revenue because you have 100 times more users. So this won't work, of course.
No, it's true.
The potential, but
it's only if the content is relevant for other countries. So the machine in the Netherlands, it's relevant for somebody in Russia. But if you would do the same with ads for refrigerators, nobody from Russia is going to drive down to the Netherlands to buy a refrigerator. So the content is very important.
One of the things was not mentioned as a premium factor is the technology, because there are some companies that have excellent technology that could be sort of used as a platform as internationalization.
Definitely a premium factor.
Yeah.
And I think even if a business hasn't already realized its international potential, if it is clear that you could take that to other markets, then it would increase its value.
Yeah, yeah. Okay, then the following question as regards or buying or selling with different kind of buyers and sellers, and whether it's a private equity buyer or industrial buyer or seller. So Tim, you have experience of having been dealing with different kind of buyers and sellers, like stock listed companies and on the other side of the table and private equity companies. Any advice for the ICMA members that like tricks that would pay their airfare?
I have one trick because I was a license holder in the Netherlands for this construction site, and then I got the opportunity to buy it from this Finnish company. And if you're dealing with Finnish people, it's very difficult because you talk to them and you don't get any reaction. So you're trying to get a feeling, am I coming? But you get this poker face all the time, so it's really difficult.
Try to see your system.
But there is one trick. There is one trick. There's one trick which always works. Then you have to start drinking some beers with them, and then they started to open up. The only danger there is it's a very short window where you can actually communicate, because then they drink too much. It's game over again. Then of course, you don't want to be boring, so you keep on drinking with them, and then the next day you forget everything, so you're back at zero.
So that's the window of opportunity.
No, but when you're buying a company, you're actually doing it with people. So it's very important in the end of the day.
Good point.
It's important because if you want to buy a company, first you have to get this trust factor there before you can actually do something.
Okay. So any other advice about other nationalities? So deep knowledge. Rob, let's go. What's your advice? But you have been dealing also with different kind of buyers and sellers. So is there something that if an ICMA publisher here would like now to sell to a private equity company, or for industrial buyer, it's a little bit, I think it's easier because then you talk the same language and the KPIs and the understanding a little bit. But if the buyer is really like
I would suggest finding some representation, because
find a good investment banker.
Yes,
that's
good.
That is true. Those people will tell the story about the value better than you are able to do.
Yeah.
And that's a reality.
Yeah. Well, yeah.
I do have one advice, because for me what also changed in the game, I was an entrepreneur, but I had to buy this Muscus company. It was too expensive, so I had to go and make a deal with a private equity guy to buy it together. So now suddenly I have to manage this company with this, not stranger, but he has his own agenda. And I think in the end, you can become a better entrepreneur, because the private equity firm will force you to work in a certain manner. You have to be more professional, report things, explain things. So I have a good experience with it, but you have to be careful that you stay in control. Because the private equity firms, they want to make sure you cannot make any decisions anymore. You have to ask permission for everything. They try to take away all your shares, maybe not in the first round, but then in the second round you need €1. They take it from you. So you have to be careful and play a hard game there as well. So you have to negotiate with everybody if you try to do a deal like that.
Marco, any tips for the...
Yeah, I think the question was that if you as an asset owner now would like to sell. So of course from that point of view it goes like Rob said, it makes sense to make good memorandums of it, have a banker and present it. And as for you as a seller, it doesn't matter. Is it private equity or industrial, or who is it? In that type of situation, you just want the best price. So that's right. But then, of course, on the other side, if you look at yourself as a buyer or entrepreneur, it like Tim said, it makes very big difference what kind of partner you have. Or if you are an entrepreneur now and you sell your business, whether you stay there as a holder or become a shareholder in something else, or if you just sell for money, or do you have to stay? Or do you want to stay, or do you have to stay there for years? Though, then it's not necessarily best idea to sell to the highest bidder. No. If you have to stay there for 5 years and
make the result.
Yeah.
You have promised.
Yeah.
Yeah. Markus.
As mentioned before, it's the same, I think. Take a partner, even if you sell or if you buy. So as more involved you are, you should step back and let somebody do your job. And also if you're buying, a lot of deals don't work because you have to know when you have to stop asking questions. You don't know how to have every detail. So that's for us off the chance to get it, because if some details are not necessary and if the process is too long, it's getting dangerous.
Yeah. Any questions as regards these tips now you could ask? No. Then we go to the multiples. So, now your advice. How many times of net sales, and what seems to be the general sort of like range? I have here some numbers, but like, of course, depends on the market, whether you are an international company or whether you are sort of very small, whether you're a market leader. But from your experience, give some like range that like a couple of criteria why that was. And Tim, start.
It's so difficult to say because it's a case-by-case story. So I'm not too comfortable in saying multiples, but I was involved in one deal in Belgium where I was a small shareholder in this classified site, which was sold to eBay last summer. And there was a ridiculous valuation. Unfortunately, I was only a small shareholder, so I still have to continue.
To work?
To work. But we are talking there easily about 20 times EBITDA. 25. So but it's because they see the opportunity, and then.
And that was a market leader,
and it was a market leader.
Competition with Schibsted, and they really wanted to win.
Yeah.
They wanted to win the deal.
Yeah, I'm not convinced there's much of a pattern. Although yesterday in Marco's slides, I think he was saying for the market leader around 20 times.
Yeah.
But it's so dependent on the individual situation. So if you look at what happened with Pre-Loved and how much that was discounted, it's very variable.
Yeah, it's the same. So it's always case by case. You cannot say. But if you then just table-wise look at some averages, I guess it's typically something like a little bit over 10 is the EBITDA multiple. But of course, for some companies, it makes sense to buy for some.
Depends on the revenue growth.
Yeah.
The revenue growth is extremely important.
Yeah.
Yeah, how mature you are and how much growth is there, and then of course, if it's mature, I think. It's not wise always just to look at EBITDA. So if you are a high margin business, even though there are investments, your EBITDA is quite close to cash flow. But I think this affects very much these number 2 and 3 valuations as well, because if you just make if your EBITDA margins are below 10%, probably almost all your cash flow goes to investments.
Yes.
So actually, even low multiple is probably multiple to almost no cash flow, whereas in market leader you get the EBITDA almost equals cash flow. Yeah. So there's huge differences.
Yeah. And that was very good I think remark on that investment needed anyway, and if you have that very low, so you end up in trouble. Markus.
It's the same. I think if you're selling, you shouldn't expect 20%. We have seen that Scout Group didn't manage to go to this, but it's somewhere between. Yeah, it's everything is said to this topic. It's hard to say. It's just a general figure.
Yeah. Okay. Any questions?
Everybody's talking about horizontals. And I believe the numbers that they're talking about are representatives given to horizontals. When we're talking about verticals, do these multiples differ? Like the example in France. For real estate, for traffic, Le Bon Coin generates more traffic. But as far as the inventory or the number of real estate brokers, SeLoger has more. So does that make any difference for the multiples, for verticals?
You want to?
Yeah, I think it does. And I think at the moment those verticals are undervalued. So they're not getting the multiples that they should. But Tim might disagree because he believes that the horizontals are going to destroy the verticals. So then maybe they're valued properly. I think it's such a case-by-case thing. And I suppose it depends on the size of that market and particularly the size of the commercial market, the commercial opportunity.
Yeah, I think it also depends a little bit which vertical.
Yes.
Real estate,
Yes. Or recruitment.
we see Axel Springer paying big prices in Belgium. Car verticals, I think, are already more difficult. And this is Autoscout, and job portals. Okay, this is a big question mark for me. I'm also, I see a lot of pressure from LinkedIn on these job portals. So.
Or Indeed and other crawling
So
paste.
that segment is definitely under pressure. Get out now.
Yeah, somebody's investing more in that. I think I definitely agree with. It depends on the vertical, because in some of the verticals you have very healthy margins with B2B models there, but as soon as there are consumer sales involved, so then you are much more like it's much more difficult, and then you are also easily threatened by these freemium players, because in B2B markets still our customers usually appreciate there is value. Posting an ad is still like marketing, and they would like to buy additional services, but for a consumer they only want to get the deal done and as quickly and easily, and they don't necessarily want to buy any extra services. So that's in that sense like a little bit B2B. Yeah.
Felix?
With Axel Springer now coming into the classified market, more on verticals, do you see it as, if first, the question is, do you think they will be successful with their strategy, because they're buying a lot of established markets? And if not, don't you think it will hurt our industry? Because I think one thing that Schibsted and did for this market was show how valuable it can be if you do it properly, and therefore it raised the value of our businesses because of that success. Do you think there's a danger of, if Axel Springer mess it up, that it could actually devalue our businesses?
I'm laughing a little bit, Felix, because I have this game at home where you throw in a marble and it goes like this and it comes out somewhere. And it's the same with you when you're asking a question. You go like this.
Yeah, but he has female brain. I can follow him. I can follow him very clearly. So no problem. I just it is because I think what Schibsted has done good for the market is really that this is now classified as very interesting for a lot of investors and a lot of companies, whether it's retailers or venture capitalists and startups. So that's they have made a favor for us. But the only problem is that you have to be then on a market that they are not operating, or then you have to be the target they would like to buy, and you are a market leader. Because if you are in the market and they are entering, you might end up in trouble. But then for example, with Axel Springer, so they acquired SeLoger in France. And what is happening to SeLoger, Gerard perhaps know even better, so they are really losing market share to Schibsted, Le Bon Coin. So it's sort of, sorry?
They're not making any headways, for sure.
Yeah. And now they are not necessarily betting that much on real estate, they are now betting more on recruitment. Because they are really, with Stepstone, they are really aggressively buying now websites.
They bought a website in South Africa.
Yeah.
It's one of the top 3, of which we are one, and they've just regressed, maybe because they're regrouping, and competition already in our market. So
But is it because of Axel Springer's bought it, or is it some other reason, of the management or something
well,
else?
It happened, the deal was done in November last year,
Yeah.
and since then, it's just been a decline. I don't know what they're doing, but maybe they're going to do something big. They must keep on doing it.
Yeah. Any comments on that? What
No,
I would, yeah.
The only thing I could say is that I spoke to there's a lot of Dutch guys now with Naspers, and this one guy told me, our vision is to buy horizontals in markets. So I don't see them buying vertical real estate or car portals. They want to go for the horizontal because in their view, and that's what Rob said, the horizontal can crash all these verticals. So that's where they're putting their money on. And I think Axel Springer is a little bit too late in this game because the horizontals are gone or almost gone. So now they are doing these real estate and job portals. I think it's a dangerous strategy, especially the job.
Peter is sort of like throwing me soon with the mic and asking me to stop because you will have a lunch now. Any questions, or would you like to have lunch?
Lunch.
Lunch, okay, thank you.
We got
Thank
the question
you.
record.
Thank you for the...
Thank you.